Fed has spoken and everything is in chaos right now. An hour ago, the Fed announced the March rate hike. Yes, they did hike it. 25 basis points, a 0.25% in interest. That was kind of the odds-on favorite. That's what Vegas odds makers, believe it or not, they actually do bets on these kinds of things. That was the odds-on favorite to go up a 0.25 percentage point. Let's kind of break down slowly what's happening. And by the way, right now, the markets are taking that as bad news. However, there were some interesting comments, and this thing's like reading tea leaves. People, the news cycle will look at the individual verbiage that comes out in the announcement and say, well, it's different than we're expecting, blah, blah, blah. The indications are that we're nearing the end of rate hikes. That's great news. If that's actually true, and we're going to be only seeing maybe one more small interest rate hike, that would be fantastic. Unfortunately, even this 0.25% interest rate hike is probably going to doom at least 2 and then maybe as many as 20 banks to federal receivership. There are 2 banks or 3 banks that are right on the verge, and that 0.25 point was probably enough to push them out of business. There's still a bank run in progress. It's a slow run. It's more of a bank walk. Nonetheless, there are people taking out cash from these banks. Now, the problem, like the first one, Silicon Valley Bank, the problem was by the time all the cash they had was taken out of their system by their depositors, they had to liquidate assets they were holding. The assets they were holding were T-bonds and T-bills bought at the behest of the government. The government said, listen, instead of keeping 10% on hand, which was the old rule, you got to keep 10% of your deposits in cash, either with the Fed or in their own bank. Instead of doing that, why don't you just buy T-bonds and T-bills with the government? They're safe. The government backed lending instruments. And the problem is the T-bonds and T-bills, the yield is in reverse to the price. So in other words, when interest rates goes up, the value of those bonds goes down. Silicon Valley Bank had to go sell off a bunch of those things to raise cash to pay the depositors, and they were sold at a loss, like $1 billion loss. It was a huge amount of money. Same thing's happening to all these other banks. You're seeing last week, Credit Suisse was bought out at the 13th, 12th hour by UBS Warburg, and they're still doing horribly. This was after the Swiss government put $58 billion into that business. And, they sold the business a day later for $3.5 billion. Huge loss for the Swiss government. But at least Swiss government didn't go bankrupt. We're not going to be able to go bankrupt in this country because we are the world's reserve currency. Nonetheless, the Fed last week printed $300 billion of new money. Their balance sheet have been going down. They've been doing quantitative tightening, which means they're pulling cash out of the economic system, out of the economy of the United States, and out of the world's economy. But all of a sudden, because of 2 banks going out of business, Signature Bank and Silicon Valley Bank, because those 2, they had to print instantly $300 billion without approval of Congress, without anybody saying anything. They just unilaterally did that to shore up those depositors. Then you get our Treasury Secretary, Janet Yellen, going on all of the Sunday talk shows saying, we're not going to bail out anybody else. We're not going to cover deposits over the $250,000 or $500,000 limits that the FDIC has imposed on these depositors. And what they did last week was to take all of the depositors in those 2 banks and make them whole. So somebody who had $4 billion in that bank on deposit and only $250,000 was guaranteed, the government backed the whole thing and paid the whole $4 billion. Now, if the government was to go out and back every single depositor in the United States with all banks, then we would be out of business in terms of the government. So the Fed is on a real precipice, and frankly, what they did today was probably the best thing because they're still giving the nod towards inflation. In other words, inflation is still a problem, according to them. You guys have seen my videos in the past where I think inflation, the way they measure it, is a bunch of BS. Nonetheless, they probably did the right thing by going up a 0.25 point, but they've got to stop. And then they've got to start dropping rates. So what is all this going to mean for those of us in the housing industry? First of all, the mortgage rates are not based on the Fed funds rate. They're based on the 3-year and 10-year T-bill rates, or 2-year and 10-year T-bill rates, primarily the 10-year. And the rates on those things have been going down. Once again, interest rates goes up, the value of those bonds and bills goes down. which then means they can be used to back mortgages at a lower rate. So that's where, when there's good news, you've seen mortgage rates drop. Now, the jury's out. We'll know in the next 24 hours how the society as a whole values or views this quarter point or 25 basis point increase. I think it's going to be looked on in our industry, in the housing industry, as good news. I think you're going to see mortgage rates probably stop going up more, potentially going down a little bit more, and maybe in the short run for a week or so they go up a skosh. But I think it's going to settle in, and over a period of time, you're going to see mortgage rates drop. They're not going to drop precipitously, but later this year, I think the Fed is, and when I say later this year, I mean it could be April, could be next month. They're going to have to start dropping interest rates because they've got this thing in the balance. Do we beat inflation or do we save the economy? And I think at the end of the day, they're going to have to save the economy. I don't think there's any choice. And the only way they do that is by dropping interest rate and creating economic demand. I think you're going to see later this year, basically a whole new platform for how we view the economy come out as a result of this. In other words, we're using Keynesian economics that are 200 years old. There are some new thoughts and new theories, which are probably too deep to go into on a video like this, that look at the role of government differently and look at the role of inflation differently. And so as a practical matter, our government is using the Fed to prop up the economy, to prop up society, to do different things like help everybody out when the pandemic occurred like they did 2 years ago. I think you're going to see more of an activist role for the Fed in managing the economy as a whole. And I think you're going to see a lot of things change, but I view today's deal as neutral. It's neither good nor bad, but it leans a little bit more towards the good side. At least that's how I'm looking at it. And there are always different ways to work around these kinds of issues, or another way to skin a cat, as we like to say. And for those of us in the housing industry, we should look at this as a good thing. I think it's going to help stabilize the market a little bit more. Prices are still going to drop in areas where there was overbuild or there is going to be a huge amount of foreclosures. We're going to talk about on a video here shortly coming up about what the hedge funds have going on. There are some housing hedge funds that are in dire straits, really bad. But that's the next shoe that we'll drop. We'll talk about that in a future episode. But today's announcement, I think, in my opinion, is thumbs up for us in the housing industry. Okay, thank you for watching. If you get a minute, I would love to hear your comments about what you think of these videos. Feel free also to put in any topics down here in the comment section, things that you'd like to hear me discuss. Any questions you want, go ahead and put in here. We'll make sure we get a video on it when we get time. And as always, please like and subscribe. Hit that ring the bell button as well to get notified every time there is a new video. Thanks a lot, everybody.